Have you ever wondered how business expenses worked? When somebody says they can write something off, or they could write that off, or they could write this off, and how that actually works? There's two equations. There's one that the masses use, and then there's one that business people use that are successful, or the people who are striving to be successful use. And there's a same set of variables, but just in a different order. And that order makes all of the difference. We're gonna talk about that, right? I'm sitting in my Model 3 Tesla right now, and I write this off. I've got a drone, writing that off. I have all of the gym membership, my gym membership, all the supplements, basically anything I wanna do, I write that off. And anybody who has the creativity and the resourcefulness can go through that same process completely legally to write off all of effectively what they want to do. And that allows you to create the lifestyle that you want while at the same time paying less in taxes. So let's get into it. But first, if this is your first time here, what's good? My name is Sam, and for those of you who are returning, it's good to freaking see you. Okay, so the equation has three variables: income, expenses, and taxes. That's it. Both equations start with the income portion of things, but the first equation goes income minus expenses times the tax rate, right? Or times the amount, like 1 minus the tax rate. Now, the second equation has the same exact thing. However, it is income times 1 minus the tax rate, then minus expenses. So effectively, in a very simplistic way of saying it, is income minus expenses minus taxes will give the net amount, or income minus taxes then minus the expenses. So the only two variables that are switched are taxes and expenses. The first equation has expenses first, the second equation has expenses last. And what that effectively does is, we'll go through the first equation here. The first equation allows the individual to have control over all three variables. The first one is income. So whether you own your own business or you have a W-2 job, you are in control of your income. Whether you like to believe it or not, you are 100% in control of your income. And for those of you who are telling yourself that your boss is controlling how much you make, or your company, or whatever story is you're telling yourself, that is just the lazy way out of figuring out how to make more money. Because you can find a different company to work for, or you can start your own business, or you can get into a sales job, or there's many, many other things, and you could just keep going on and down that list, right? So the idea that somebody says that their company makes the decisions about how much money they make is false. It's only, you're talking micro versus macro. Anybody is able to increase or affect how much money they make. And in a business, like if you're the business owner, like clearly you're in charge, right? I think there's no question about that in terms of how much money you make is completely in your hands. So when you have income and then you have expenses, what this allows you to do is control those two variables, right? You can't control the framework at which you pay taxes through, because the tax rates you can't control. But the framework, you know how to manipulate. All you need to do is know the system to legally reduce your taxes to virtually nothing. And if you have control of your income and you have control of your expenses, the only thing you don't have control of is the framework of the taxes, but you can control how much taxes you pay because you know the system. You could effectively make your expenses equal to what your income is going to be through strategic investments to allow you to grow faster in the preceding year. For example, I'm preparing for 2020 taxes that will be filed in 2021, right? 2020 right now, I'm preparing to get documents together to understand how much I'm going to end up owing for 2020. And when you do these types of things, there is certain expenses that can be prepaid, meaning, so for me, right, my electric, I can prepay that. So these are expenses that say I would incur next year. I can actually pull that into this year. So now I can take the expense of, say, for example, say it's $200 a month, that's $2,400 a year, and I pull it from the expenses next year, I pull that into this year. And you're like, well, why the fuck would you want to pay for those expenses in advance? Great question. Well, because those expenses came out, say it was $2,000 even for the whole year, right? That's how much you prepaid. And I'm paying an effective tax rate of federal and state of 30% combined. Now, I take that $2,000 and I pull it into this year, but now that expense goes out this year, which means I get to write it off this year off of the income. So I'm effectively saving $600 in taxes that would have to go out this year. So if I have to pay taxes, I'd rather pay them in the future than today. And effectively, you can kind of push that out in the future. If you have, say, a phone, right, you could prepay your phone bill and it's $120, right? And you're like, well, that's only $3,000 or $4,000, right? Like, that's not a tremendous amount of money. Or an investment into advertising, right? You can prepay some advertising. You can prepay for marketing. You could prepay for a lot of different things when, again, the framework, you have to be creative and you have to be resourceful. And then and that's why you want to, I'm not an accountant. This is not tax advice, right? You got to talk to your accountant. But this is how you can go about approaching these things so that you can pull those things in the future. If you had unlimited money to invest in that one or two or three things, whether it's a coaching, a course, something, equipment, right? Some type of CapEx, capital expenditure that you could invest in that would allow you to grow faster in the future, you can make that payment, or you can pay for part of that next year. If it's a capital expenditure, it might have to be depreciated, so you're gonna have to talk to your accountant. Some things, depending on exactly what they are, you might be able to take the full expense. So you got to talk to your accountant about the semantics of the details. But you can pull those expenses from next year into the current year to get rid of any tax liability in this year. So if somebody has $10,000, just hypothetically, right, or $20,000 of expenses, and they're around 30% in terms of their combined federal and state tax brackets, then that they triple that in terms of the expenses that they would have to be writing off. And now anybody who is doing business understands that this does not, just like somebody gets a credit card doesn't mean, oh, I have a credit card, I just go spend money. You don't just be like, okay, well, now I have to spend $30,000 to get rid of my $10,000 tax bill. That's not how it works if you want to be successful in the long run. There has to be a reason behind it, right? So we're assuming that there's some idea or logic or economic reason behind why you'd make these decisions to invest into your business to allow it to grow faster or reduce the expenses in the future, right? You want to be able to do some of those things, right? Where you're doing one of those things, maybe you're buying another company or something along those lines to get rid of that tax burden that you would have today, and you can effectively push that into the future when you're a bigger company so you don't have to pay that today. Think about just the time value of money. If I was to borrow $1,000 from you and I'll be like, I'll pay you this back, but instead of paying you back tomorrow, how about I pay you back from a year from today? You'd be like, oh, well, I want some interest on that money, right? And with the taxes, you don't necessarily have to pay the interest. So you can take that money that you have to give to that other party, in this case, the government, and you can take that and you can push it back to the end of next year, right? Or early the following year. And this way you can get that money effectively at an interest-free loan. And that's assuming that you don't go into business and you continue your business into year 3, because at the end of year 2, you're going to have other investments that you can make that allow you to grow faster in year number 3, that you may potentially be able to make those investments at the end of year 2 or in some point in year 2 that also pull those back. So you could potentially push that tax burden back even further. Think about companies like Amazon, where they're effectively not paying taxes for 20 years by just continually investing in their business in a fashion that allows them to show losses. And then if you're showing losses, you can actually carry those losses forwards. Now, what about example or equation number 2? Equation number 2 is what probably most of the people watching this utilize for their personal life. It is income, right? And this is going to be from a W-2 job. So income minus taxes, then minus expenses. So in the first equation, you've got income, and then you have expenses, and then you have taxes. You get to control these two, which indirectly allows you to control how much you pay in taxes. In this, the government's like, no, bitch, I'm taking my portion first. So you make your money, and if you increase your money, you pay more in taxes. In this equation, right, equation number 1, if you make more money, you can make your expenses higher, right? And that doesn't, and people always think about making expenses higher as in like bills that they have to pay kind of thing, and that don't allow them to create the lifestyle or do the things that they want to do. And we go back to what I've already mentioned twice, that the things that you tell yourself you want to do, first of all, you need to understand what those things are that you like and enjoy to do that get you fulfillment. And then think about being creative and resourceful again, because with enough creativity and resourcefulness, those things that you love to do, you can actually pull and shift things around so that they can actually be a business expense, or a large portion of that can be a business expense, to be able to get rid of most of that, or give yourself a 30% discount doing things that you like because you're writing them off with enough creativity and resourcefulness. Remember, in that second equation, if you're making 100 grand, the government's coming to take their portion, right? If you're making 200 grand, government's coming to make your portion. Over here, you can do the same type of thing, right? If you're making 100 grand in a small business, then you can take your expenses, and you have control over the expenses, but you have the flexibility to, there was never any time where it is an intelligent thing to do things that are not legal, in my opinion, right? Unless somebody's it's a life or death situation potentially. But in business, for my fundamental pieces of things that I'm always going to want to stick to is it has to just be legal and ethical, right? Where the ethical portion is, potentially questionable, but it always has to be legal, right? Because ethical could be argued upon, right, for certain things, but it needs to always be legal, and the ethics is going to be based upon me. I have to be true to who I am as a person. So you can go through and change a lot of things and change your lifestyle if you are creative enough with how you structure your business in a way that creates the lifestyle that you want. Because that's what it's really about. When for me, success is not just how much money somebody's making. Yes, money is awesome. Yes, money is a lot of fun. Yes, I'd rather have more money than less money, right? But at the same time, success for me is doing what I enjoy to do and creating the life that I want to create, how I want to do that. And money allows me to do that because I can change things around to do whatever I want. Where, again, in that first one, if you're making 100 grand, then you got to pay the tax guy, right? If you're making 400 grand, then you got to pay the tax guy, right? If you're doing it in a different way in a business or investments, you can effectively get rid of almost all of the taxes, if not all of the taxes, for a long period of time, and then you can switch that actually to investment and do other things, which we can touch on in future videos. So make sure you press that subscribe button and that bell notification to show how you can actually, in the sense how I think about taxes, they're almost a option if somebody's not thoughtful, creative, and organized enough to take care of them. Because if you spend enough time studying and understanding what's going on, you can either completely eliminate or drastically reduce the amount of taxes you pay. 100% legal, right? And the people who tell you otherwise don't know what they're talking about, or they're scared. And there's nothing wrong with that. That was just the framework that they've been brought up with, and they just don't understand how to do it themselves, and they don't want to learn how to do it themselves. So they're going to project that doubt. They're going to project that them being scared out to the world, whether it is you or somebody else. So if you guys like this video, make sure you press that subscribe button so you can get notified next time I drop a video. Share this video with somebody else. If you would like more the semantics of some of these details, let me know down below in the comments. Peace.